live. If you can hear me, please confirm in the chat box. You can see my screen. Can you hear me? Can you see my screen? Morning. If you can hear me, please confirm in the chat box. I can hear you. Okay, so I believe I'm audible. Yeah? Audible. Yeah? Okay. Okay, so welcome to London Live Market Analysis with ProFX. It's good to be back here once again. And so, what the session is designed for is to give us insights into key levels, market dynamics, and opportunity what outflow as the London session approaches. Right. So, confirm if you can hear me and if you can see my screen. And the feedback. Good morning. Can you hear me? Good morning. Can you see my screen? Let's start off with gold this morning. Then we go to USD. Right. Okay. Right. So let's move. So gold, I'm going to clear all this and start afresh. So gold has done pretty much an expansion from yesterday into today. So I want us to go and investigate what made this guy expand this way from yesterday up until now. Okay, so let's start with our 4 hours time frame. Let's look at the bigger picture. So when you come to the market for the first time, you want to know your higher time frame bias. Before you come into your lower time frame for execution, you want to analyze from a higher time frame. Okay? Before you come into your lower time frame execution, you want to what? Analyze from a higher time frame. So I'm giving you a step-by-step process. So step one, I will say number one, what you guys do is one, analyze. Okay, number one, analyze on a higher time frame. Even if you are a scalper or day trader, or first is analyze on a higher time frame, then two, execute on lower time frame. So these are the two things you are doing. Execute on a LTF. So every single time, this is what you are doing. Analyzing on a higher time frame, executing on a lower time frame. All right, and we have what is called time frame alignment. How to align your higher time frame to the lower time frame. Okay, and secondly, we have a rule of engagement which I teach my students, which is the D, L, and C. So D is direction, L is location, and C is confirmation. Okay, so these two things you bear in mind when you come to the charts. Number one, I want to analyze on a higher time frame. Number two, I want to execute on a lower time frame. Next thing that comes to mind is okay, I need to have a direction. Direction is going to tell you what the market is doing in the sense of the trend. Direction tells you what the market is doing in sense of what? Trend identification. Direction tells you what the market is doing in terms of trend identification. All right? Location tells you where to get involved. Location tells you where to get involved. And what we have there is key level identification. So we call this place, we have key levels. So you have key level. Under location, we have key level. Some people call it point of interest, POI. Some people call it area of value, AOV. So here we have what identifying a key level, identifying a point of interest, identifying an area of value under location. And lastly, confirmation tells us when, finally, when. And what we're identifying here is what? Entry. Identifying entry model. So here we have entry model, entry model, entry model identification. Okay? So this is like a summary of what you need to do. It's like a rule of engagement. When you come to the chat, what am I expected? I get that question all the time. I get the question all the time that when I come to the charts, what will I do? When I come to the charts, what should I do? So I've given you like a like a breakdown. So first, you are expected to analyze on a higher time frame and execute on a lower time frame. So write this on the chat box so I know you are following. Analyze on a higher time frame, execute on a lower time frame. Everybody, let's go. Let's go. Right. Analyze on a higher time frame, execute on a lower time frame. Analyze on a higher time frame, execute on a lower time frame. Everybody, your rule of engagement: analyze on a higher time frame, execute on a lower time frame. I want to see our responses. Analyze on a higher time frame, execute on a lower time frame. Thank you. Thank you. Thank you. Yeah. Analyze on a higher time frame, execute on a lower time frame. So you're not confused. You're not confused of what to do. You know that you are coming to the higher time frame to analyze. You're dropping down the lower time frame to execute. Clear. Then the next thing that comes to mind. So the next question is, okay, I want to have my direction, location, confirmation. And this, I summarize it. Direction is for higher time frame. You can't be looking for direction in lower time frame. Doesn't make sense. So your direction should be found on your higher time frame, right? Then your confirmation should be found on the lower time frame. Now, this location, you can choose to use higher time frame for location, that same higher time frame, or a medium time frame for location. I come again. Direction is for higher time frame, non-negotiable. You can't negotiate your direction for higher time frame. It must be a higher time frame. Confirmation must be your lower time frame. Now, the location might still remain higher time frame, or you might want to have a medium time frame. Okay, so I might not say, okay, let me not say 3. I can add 3 and say refine location on a medium time frame, MTF. These are like a sidebar. Refine location on a medium time frame. So, for example, if you are working with a day trader, as a day trader, your higher time frame is on, say, 4 hours. Okay, your lower time frame executing on 15 minutes first. All right, you can choose to refine your lower time frame to 5 minutes and also to what 1 minute. This is where you want to have precise sniper entry. All right, so these are the time frames for execution. Now, if you're entering on your, if you are doing your analysis on 4 hours, your confirmation, right? That's 15 minutes, 5 minutes, and 1 minute. Now, for location on refinements, you want to know your order block, you want to know your fair value gap, you want to know your demand and supply. Your time frame for location, 1 hour. That's the location time frame. So you can choose to use either 4 hours, same 4 hours, or you want to use 1 hour for refinements. Go below 30 minutes for valid location. Because if you are going to 15 minutes and 5 minutes, you might be induced or swept out. So a valid location would be 1 hour or that same 4 hours. It's clear, typing clear. It's making sense, typing making sense. So because time frame is very important. Time frame, very important. So analysis also want 4 hours. Execution is on what? 15 minutes. If you want to now refine your execution, you go to 5 minutes, 1 minute. For location, after doing your direction on 4 hours, you can might still use that same 4 hours to mark your location, point of interest, key levels, order block on that same 4 hours. Or you come down to 1 hour or 30 minutes to mark your location. I believe this is clear. So this is what you have. Before you come to the chart, you want to settle this. What is my time frame for direction? What is my time frame for location? What is my time frame for confirmation? What is my time frame for direction? What is my time frame for location? What is my time frame for confirmation? All right, clear. They only have two persons here. I'm only seeing Melkis and friend. Where are the rest? Okay, let me put this in. Right. So let's move on. Now you have known that. So let's now go to our analysis and what location. Right. So on gold, what's the first thing we want to do? Let us analyze direction and what location. So I'm using 4 hours for both direction and location in this case on gold. I'm using 4 hours for both direction and location. What is the direction? How do you know direction? Direction could either be what? An uptrend, that means you are creating higher highs, direction, or a downtrend, creating lower lows. That's the theory of direction. Basics. Basics. An uptrend creates a higher high, a downtrend creates a lower low. Breaking structure. When I see a break of structure, I know that's an uptrend to the upside. Break of structure, downtrend to the downside. So let's go to 4 hours and see what's happening. On 4 hours, we saw the recent break of structure is where is here, right? And what I learned from Sabi Girl, the first break of structure will most likely be an inducement. I learned that one. I will land strong. Your first break of structure, if market won't do you shaking, that first BOS will most likely be what? An inducement to take the next one as the location to buy. All right. So she says that market moves in twos. When it comes to advanced structure, market will move in twos. So your first break of structure is an inducement. So what I would mean is that if you are moving this way, market will move in twos to validate a trend. So this one is not a trend yet until the second what one, because this first one will be used as inducement into the second leg. So this one will what induced. So we have this inducement here, IDM. So that's our AIT, all right? Our I to target what the area of value here. You get now. So this first BOS inducement targeting what the next point of interest. Simple. All right. So let's go back to our chart and see. We had the first break of structure, very clear, right? And it was so clear that this guy swept out this guy, came into this guy, and is respecting this second what location. You can see that's a practical example here. So what we see here is, let's mark out it, because who are expecting to buy from here now? Yes or yes? This is a very strong demand zone that buyers are expecting to buy from. But market showed them shaggy. So this is a demand zone that failed because that was the first break of structure. Demand zone or other block, whatever you want to call it. So this guy failed because for a true movement of the market, the first break of structure is an inducement. All right. So having said that, the next origin of the break of structure will be the location, which is this guy here. And we saw that we even add a sweep a little bit. That shows that this guy is ready. Even at this second origin, we still add a what? An inducement. He swept it, he broke structure, returned back to reclaim the block and what? Push up. This is a sign that the big boys have initiated the bullish order, right? So, like I always say, we don't have the back end information. But when candlestick print in a manner, we know what these guys are doing at the back end. We know what these guys are doing. So this is just a clear signature that these guys have initiated an order flow to buy. Yes or yes? If you agree with me, say I agree with you. What we are saying here is even coming to this origin, we still swept this location. But in this case now, we swept, broke out, and returned back to the origin. Then we got boom. So we reclaimed this. So we have marked our. So what I did here is I'm marking our key levels and direction. So we know we are bullish. Direction is bullish. So let's take that down. Direction is what? Bullish. For our higher time frame, right? On 4 hours. I've established that. And we have marked our location, our key level. Inducements are taking place at the key level, right? So we are bullish. Location here, boom, 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 right? Now, currently, all we want to do is just buy. So our pro trend is to buy. Counter trend is to sell. Pro trend is to buy. Counter trend is to sell. So if you are buying, what are we looking for? Looking for pullbacks, continue buying. So we're looking for break of structure. We break structure, we pull back, we buy. Okay. So let's now trace this. Let's now trace this movement. Let's trace. So when price tapped into this demand zone, notice that we have been selling before price got here. So there must be a realignment to continue the buy. So if you drop down to lower time frame, what you see is we have a bearish structure up until when it comes into our block. When it came here, there must be your previous highs will be taken out as a change of character. Okay? Previous highs will change of character. So let's mark the structure. We are still on 4 hours for a valid character change on 4 hours. So we have the lower high and what? Lower low. So we have here our very first high was taken out here. Everything here was internal structure. Even this break and pull out was internal. Until this high, we are still under this what influence of sell. Okay, so now we have taken out that very supply, which you can call a breaker block, or as you always say, breaker supply. So that has been cleared. So if you notice, supply zone was broken out, right? Supply broken out, came back to respect that supply for this new move. So like a happened, where a supply now turns to a demand. Okay, I'm trying to show us the movement that happened from Monday up till now. So after breaking out from this supply, we pulled back to this. So there on lower time frame, you will see clearly that there is location to continue this buy. So this 4 hours. So let's drop down to 15 minutes. 15 minutes for entry. 15 minutes for entry. 15 minutes. So let's start from the origin where we had yeah. Are we together? Hope you are getting this. So first thing you want to see is a change of character. Once price into your 4 hours order block, you must see a change of character, right? Must. Now, where is the character change you have it? It's so clear you have it here. It has to be clear. Lower high and what? Lower low. Is this the character change? Answer on the chat box. Yes or yes. Lower high, lower low. Shift. Is that the change of character? It has to be clear. If it's not clear, it is not there. If it's not clear, just leave it. That means there was once a bearish structure, and for the first time, we saw a clear shift out of that high, step by step, right? So we have price shift. We now have a new low and a new high. Origin of the base is here. Now the price come back to that origin for the buy. Yes or yes? The price come back here. So that base, 15 minutes, I will call it 15 minutes demand base. 15 minutes demand. Let me use base demand or base demand. So price came back to that base and your entry is either middle line or what pixel line. So even from Thursday was when this buy started. That was the origin of this buy move. From Thursday is when what this. That's why swing trade. This way swing trading will make sense. So for swing trading, you don't have to consider session. For swing trading, just come and mark your direction, location, confirmation, and let it run. Because for swing trading, you're not looking at what is the session. Are we in London? Are we in New York? Are we in Asia? No. For swing trading, your business is direction, location, confirmation. Direction, location was 4 hours. 15 minutes, there was a shift in structure. You mark your base origin, you put your buy limit, and you go and sleep. When it's like, it comes there, either stop loss or take profit. Now, you know you're entering from 4 hours. Where will be your take profits? As a swing trader, 15 minutes is here, right? Just go to like 1 hour or back to 4 hours to target. So higher time frame will be the place where you look out for your profit taking. Once you have taken your entry on that 5 minutes, 15 minutes rather, you're looking out for what? The higher time frame for your first entry will be this what? This high. Okay? Because we have seen that the direction as what? This is a reversal pattern. So I move this guy up. Wow. This is 1,113 pips. Something will happen. Something is happening. This is 1,000 and the duration that this delivered, let's see, from this point it triggered. So this particular point it got there. This 3 days. In 3 days, that's delivered 1,113. So before this guy started, we never knew that 1K pips was coming our way. That's why I always say, don't focus on the scoreboard. Focus on the game. Don't focus on the scoreboard. Your own job is just to come to the charts, come with your best version of yourself, analyze, execute, and manage. The market will take care of the profits or your losses. Your job is to what? Come to the charts, analyze, execute, manage, and leave the rest for the market to take care of itself. If you're together, type in together. Let me know you're following. And like I always say, your change of character has to be happening on your what location. So your confirmation, which is first, your confirmation entry model that we have under DLC, confirmation entry model under DLC must happen on a location. The location that you found on your higher time frame or that you refine into your medium time frame. On that location that higher time frame gave you or what medium time frame gave you, that's what you're looking for what? Your picture of character. Because it can form anywhere. Confirmation equals entry model must happen on a location on I'm doing this breakdown because of some new persons in our midst. So if you are already an OG, please pardon me. I have to. I'm assuming that everyone here is. We have some new persons that's given by your higher time frame or medium time frame. Is this clear? Write this on the chat box, everybody. Confirm on the location given by a higher time frame or medium time frame. Write this out, write this out, write this out. Confirmation must happen on the location given by a higher time frame or these are trading notes that guides you where you are actually on the charts. So if you are not seeing your entry model forming on your location, that is not a valid confirmation. And the location must be a medium time frame location. Like in this case, a 4 hour block that has been induced. On that 4 hour block, we saw a 15 minutes change of character. It is no brainer. The market will respect most of the time that price action. Are you writing? Which is your entry model must happen on the location given by your higher time frame or medium time frame. So this guy delivered 1,100 pips just between Thursday and what Monday. And now we are here. So let's now go intraday. This is a swing trade, right? Swing trade. Let's now go intraday. So what I want us to implement is while you are learning swing trading, if you have the time, you can swing your trade and come intraday to now scale up. So your 1 to 22 can turn to 1 to 50, 1 to 80. Because this 1 to 22, they don't show up. You're not coming intraday to now take advantage of those internal structures. You get what I just said? After setting your 1 to 22 for swing trading, sure, you're not coming into your day trading if you have the time to secure those internal 1 to 5, 1 to 3, 1 to 10, 1 to 8. Eventually, at the close of this trade, you're not doing 1 to 22, you're doing 1 to 40, 1 to 50. So this is how to maximize and take advantage of the opportunities. Are we together? I'm not seeing our text. Carry on. I see making a rise for text. Say carry on. Okay, all right. So intraday, let's see how intraday played out. So we have secured this 120 already. Intraday, we now have everyday everyday price action. So we have um, Friday, we have Friday, Monday, and we have Tuesday. So we are currently on Tuesday. We are currently today on Tuesday. So let's see. Now the market has given us what confirmation we are bullish. What do we do? Always wait for break of structure, pullback, inducement, AIT, then we buy. So look at what Friday gave us. A break of structure. If you are doing intraday, the first thing is for intraday sections, Asian section for our prime time, which is 2 a.m., 1 to 2 a.m. Then New York section, you can look at your 2 o'clock p.m., 3 o'clock p.m. Sometimes 6 p.m. is when price, like in this case now, the buy continue from this 17 o'clock. 16 o'clock is 4, 17 o'clock is 5, this can say this is 6 o'clock. So if you don't see opportunity in New York at that L2, 3, 4, by 6 p.m., it's most likely that that guy wants to now continue the next day. Like in this case now, at 6 p.m., is when this buy was ripe. This is not random. This is not random. So that means 6 p.m. should be a time you should take note of and go and back test. This case too, 1 p.m. Sorry, 1 a.m., 2 a.m. We had this first buy. Means 2 a.m. should be a time you should go and what? Back test. Because every movement in the market is not random. For this guy to buy for 1, 2, 3, 4, 5, 6, more than 8 hours from here, it means that time that began the move should be a time to take note of. That's why I back test. If I go to a chart and see that market moved from 2 a.m. and moved till maybe 10 p.m., that 2 a.m. should be a time to note of. Okay, now we are on Friday. We want to trade. We are aware that we are already in the bullish. So let's go to Friday. What do we do? As intraday traders, we're going to mark a vertical line on 1 a.m. preparing for 2 a.m. to Asian section. So that is the 1 a.m. Prime time. So let's go to 15 minutes to see the price action that is happening at that time. Remember, we are what? Bullish. We are only buying. We are not selling because that's the direction that we have gotten. Okay, we got that direction from Thursday. Look at it. We got the gist from here. Change of character, then pull back to the origin. So our origin of buy has started here already. Sorry. The buy has started here already. So all we are doing is wait for what? A good location to continue buying from. So we had a new break of structure here, right? Entering the next day. We had a new break of structure entering the next day. What do we notice here? That break of structure has created in that same location an order block on 15 minutes, right? Can you see? That's created this order block of 15 minutes and this rally based rally of 15 minutes. So the first location to buy or sell from is at the flip zone because price can decide to break structure and come back to that same location at the flip zone and what? Continue. It happens. So before price gets into discount, the flip zone is a place where price would first want to use. If there's money there, there are orders there, price will respect that place. How do we know price will go from here? Confirmation. When price gets to this place, we are checking, is my confirmation model here? All right. Do I want to see a candlestick pattern? Most of the time, I use candlestick pattern because chain of character won't happen most of the time here. So if this guy wants to buy, I want to see that price will print and close above this guy as bullish. Give me another block around here. Okay, that's to confirm that this guy will move. If not, it comes down to what? To the discount zone. So what you want to see is you have to wait for a confirmation on this flip zone. But you don't know if this guy will be used. You don't know. All right. So we saw this happen, and the first location is this other block, and we have what this also this base. Now, why was this base used and not this guy? You can tell me. Why was this block used and not this other block? Why was this block used and not this other block? Because we have other block here. Okay. Why was this one not used? And why was this one used? Anybody want to try? Okay. Let me answer the question myself. Since well, let me carry on. It was used because it was not used because there's an inducement here. You need to see an inducement before the POI. That was why that guy was not used. Inducement. As simple as that. So there's the inducement before AIT. Remember, before what's your point of interest. That's the simple reason. Technical was because there has to be an inducement that will run into a POI that will be used. So as at 1:45, 2 a.m. precisely, can you see? 2 a.m. candlestick close bullish. So you have put your buy limit at your this other block, or if you are not confident, you wait for this guy to come. I tell you already that your candlestick that forms after inducement is your confirmation pattern, right? So in this case now, it induced into this guy and closed with this. That's your entry at this close. Stop loss is where? Here. So this is an intraday confirmation entry. Is this clear? If it's clear, type in. So there was a context before coming in to say 2 a.m. prime time. The context was we are already in a bullish direction. We have seen an inducement into a POI. At that particular time, we have a confirmation entry. So direction, location, confirmation. Direction is bullish. Location is what? Area value. That's the other block that induced. Then confirmation is what? Candlestick pattern. Is this clear? Okay, clear, clear, clear. Okay. Okay. Study price action. So on our setup and analysis section is where we'll be dropping out. I'll be dropping out any screenshot I make from classes or any setup you have. Okay, so shout out to Samuel for helping us to set. So we had a last night. We sat up last night to set up our Telegram. You think is a good one. Because I appreciate Samuel for me. He did a great job. We had to sit all night to do all this, and we are set. We're set. Right. So I appreciate Samuel for me. Give Samuel a round of applause. Yeah. EJ USJK, I will get into that. Yeah. So let's quickly continue this. So after doing this, then you can see the same thing happen again. So we continued the same movement. So once you are buying, what are you looking for? Your entry model becomes what? AIT. Once you are in a buy direction, your entry model becomes what? AIT. I repeat, once you are in a buy direction, your entry model becomes your AIT. So you're always looking for where you see an inducement into your POI, you continue buying. That's your business. Inducement, POI, continue buying. So this is what you're looking for every single time. Now, look at, do you see that here again? Of course, you can see after a broke structure, inducement, POI, the buy continues. Before that massive sell now happened. Again, pay attention to the time that the candlestick got into that into that location for pattern. Um, so what time is this? As I told, 7:45. That's before London opened, right? We had the final notes, boom, down here. And even this one I did, it was still AIT. It induced this guy, came back here, and still what? Internal structure. That means it's a higher time frame that wants to happen for inducement. If you get stopped out for internal inducement, there's the bigger picture of inducement that wants to happen. right? So let's not spend much time here. We are currently here on gold. So what do we expect now? Let's go back. So let's wrap up with gold and we can go to other instruments. Okay, so we know we are bullish, right? So what's the next movement on gold? We have a break here. So for let's say this is, should we call it character? Let's call it what should we call this now? Not in character again. Engagement.
Yeah, so I think, back. So EUSD. So we came back to 4 hours. So this is what we back to 4 hours again. So the sell that happened yesterday was just like inducement back to the 4 hours. So we are back, right? Direction, location, 4 hours. So we have seen our price induce into this 4 hours, and we are back there again. So we are still having buying buyers. So price started here, came here 4 hours. There was a change of character on what 15 minutes. Similar pattern, change of character 15 minutes. That started last week. Okay, the change of character. When did it start? It started here. Look at it carefully. Until this eye was taken out, we are still in the bearish structure. So where's the character change? Very clear. Lower high, lower low. Yeah? Are we together? Then we expected the what? A pull down into what? The new new low, new high, and it pulled down. So you can see that we are still internally structured. So it came down, came up, and came down, taking out this engagement again, back to this place. So we are back here. We are back to the origin. We are still we are back to what? The origin. So we are bullish. Today we are bullish for EUSD today. EU is a bullish bias today. No brainer. Reason to wait for what? That perfect location to buy from. Okay? So similarly again, lower high, lower low. So another internal what? Internal change of character. Okay? We have our new low and what new high. So definitely this place is break of structure and what engagement. It has created a what structure and engagement for us. So I'm waiting patiently for this to happen. Alright, USD engagement. If I don't see this, I'm not interested in the buy. My AIT must show. Okay, engagement and my other block or AI value below the engagement. We have this one first. So I have this fine boy here waiting for me. Is this clear? Is USD clear? So I'm waiting for this for USD 15 minutes other block. I'm waiting for this to happen. If I do my Fibonacci from year to year, when I see a pullback, I will know where the Fibonacci is going to be. But now, I can't say this is the. You might still want to go up more, right, before it increases. But so far, we have inducements, we have break of structure, we have other block, and we have the change of character. These ones are the ones we have so far. So you can work with this. Do we have similar idea to this USD? Similar idea? USD. We are back, we are back, we are back. Can you hear me? USD, similar idea. USD. So this is what we have for USD. So let's go to the next one. You said Euro JPY, right? Yeah, Euro JPY. So are we clear on Euro USD? Are we clear on Euro USD for this setup? We are back to this our 4 hour. This is our 4 hour block. We are back here. Okay. Now we now have a lower high, lower low, higher high. This is a change of character. And the first break of structure here is creating an inducement into this POI. Last. Now this last one, if this one fails, then you're going to use the origin of the other block, which is here. Origin. So, but I would want to also bet on this. No, so I'm very much attentive with the timing, because yesterday also, as right by 8 o'clock we had an inducement. Today you can see this buy for London buy we had. What did I do? I had a vertical line at 8 o'clock, okay, showing me ease of the inducement at that point in time. And look at what happened. There was an inducement of this my that block, and the next candle gave the confirmation. So look at it here. This was meant to hold because of this inducement here, to hold for the buy. Yeah, this guy was meant to hold. So this is when even SMC gets stopped out. Even those that trade strong money concept, this is when they also get stopped out. But we cannot have all this. If you are still stopped out, you have to now wait for a candlestick confirmation close. Do you understand now? If you are still stopped out after your inducement and other block, you have to now wait for what your candlestick close, because that gave us the confirmation in I think 3 minutes. 3 minutes, yeah. 3 minutes can give us the bullish reversal confirmation. Okay. Yeah, this is the confirmation exactly at 9:03. After sweeping out this guy, look at the pattern he gave. This pattern is not a coincidence. For this pattern to happen at this particular location, it means that pattern is valid. This is a triple pattern, if we call morning star, or we call it, can you see? Drop base value forming on a location. This guy, the entry is what? This short candle, or this particular one that broke out. Either this one or this one, the entry. Okay? Your stop loss is just below 4 pips. You can only give 5 pips to be safe, right? And if you're entering from this close, the stop loss will be sorry, the stop loss will be also be as at your timing. Okay, clear? Is this clear? So let me screenshot this also, for example, so that when you see that you are on your order block, it needs to have your candlestick confirmation. So this is a perfect example that your order block, your confirmation must form in your location. For a valid move, your confirmation must form in your location. Your confirmation must form in your location. Let's screenshot this. Okay. So we have an example of confirmation on the location. So is that clear? Okay, E is clear. So let's do EJ and UJ. So we are clear of what will happen today. Today we are expecting what? Gold, 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 gold. EJ, Euro JPY, quickly. Euro JPY, Euro JPY. Euro JPY. Let's go. First thing first, what do? Come to 4 hours. Come to 4 hours to mark your direction and location. 4 hours for direction and first thing first, 4 hours to mark your what? Direction and location. So what do we see here? So clear in a glance, we see that we have this break of structure pulling back down. Very massive downtrend, sorry, internal retracement rather to call it. And what are we seeing? So let's mark it break of structure. Break of structure. What do you have next? Origin. First, start with origin, then you move up. So first, origin of what? Order block. After break of structure, you go to the origin and mark the order block first. Before you now move. So origin of order block. Then we have a fair value gap above the origin. Step 2. And that fair value gap is at the what? Breaker block. So we have breaker block plus fair value gap. The location here is what you can see that this guy was a supply base that was breaking, that was taken out, right? A rally base drop was smashed away. That's a breaker block. Came back to what? And it's sitting at the fair value gap. So we have a fair value gap plus breaker block kind of location, which is also a valid zone for a buy. So it means this guy might be the one that will hold it, not this guy. So let's take off this guy a bit and let's put the fair value gap first. Fair value gap is from here to here, here. And you can see, so let's take out this one in a moment. Breaker block is here, right? Breaker block is here. So let's take out the fair value gap. We are already at the breaker block. So a resistance turning to what? Support. And we have closed out of the block as a bullish momentum candlestick. That's the first action we have seen. So you can now jump back to 15 minutes. So with this now, 4 hours is clear, right? Is 4 hours clear? Is 4 hours clear? So let's go to 15 minutes. 4 hours is clear, right? 15 minutes. On 15 minutes, there must be a change of character. A change of character to first validate the buy. First, and as you can see here, we already have a character change happening here. Lower low is the first character change. So we have it here. If it's not clear on 15 minutes, you can go to 1 hour. Okay, if 15 minutes is not clear, you can go to 1 hour. Let's see what 1 hour is saying. Yeah, 1 hour is going to give you more clarity. So this is 1 hour. Can you see that you have this is base to drop? So you have the lower high, lower low. Okay, that's perfect. So 1 hour is confirming 15 minutes, right? You have seen a lower high, lower low, higher high, and a what break of structure. So beyond just a change of character, we have seen a break of structure, but with their weeks. This break is having weeks, but it's still a break. Okay, this break is having weeks, but it's still a break. Going to engagement. So after break of structure, to have a good buy into your POI. So let's go. It's kind of messy. Let me take off this guy now. So I have my low and my high. So to be very safe, just join your Fibonacci. That's Fibonacci, right? So we have this optimal trade entry 61.8. So for swing trading, or to just put and go and sleep, this is your what? Your entry model, right? So just set this one and go and sleep. EJ, first entry at 61.8. And if you look at it carefully from inducement perspective, we have inducement here as other block, this low inducement, and we have below it this POI, that's this guy, this block. So I think that guy is to buy. Can you see? Is that what you have on your own end? It's a penny. That's the first. What do you have now? That's the first location we have. Then the rest are going to be below, if at all, because there's no fair value gap here. Right? Even this one has been used, but this is the closest in this like is going to be used. So I'll just rather put my buy limit at 7.8 and put stop loss at 100% because it's already aligning. Okay, and it's not bad. This is what 27 pips compared to what you have as a take profit. Because then I told this guy now for you to buy, you go well, oh. You go well. This guy go buy well. Our first take profit is here, aligning with this eye, giving us a 1 to what? 1 to 2.5. This is not bad. So this is our first take profits. So go to higher time frame of 1 hour or 4 hours to maximize this money. You can see that our destination is here, eventually here, right? That's our destination. But you can take profit. Our weekly range, Monday, Tuesday, Wednesday, Thursday, Friday. Is that clear? You can identify thing of character and layers, but entry is my concern. Like I've said, entry, okay, define your entry model. That's the first question. What is your entry model? So let me take that. So if entry is your concern, I was gonna teach that in the class for mentorship. Entry model. So under entry model, you know that there are two things. So entry model, I name it IDM. How do I call it? I call it IDM at um I give it a name. Okay, IDM with candle stick pattern, IDM with SMC order block. It can be only these two because I'm giving this name so that it can help us to relate and understand. The entry model is that IDM with candlestick pattern. That means like you have seen over and over again that when an IDM happens, that's your character change. For example, now we have this happening. That's taking out what this inducement into other block. I want to say that there must be a candlestick that must form to enter to now buy. That's one. Or I wait for the pullback into other block to buy. So as you get, these are the two things that I'm looking out for. As in summary, let's check. Let's check. Let's just use one engagement that happened. Good, perfect, 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 perfect. Can you see this big buy that happened? This big buy here. What caused this buy? Look at it. This big buy was caused because there was an inducement. Watch carefully. Inducement happened here. When it happened here, for candlestick confirmation, your entry is this 1 hour close. That's the Arami. This is called Arami. Like this one is inside this guy. If you go to lower time frame, you see that this will give you a pattern, more clear pattern. Beyond just this guy is happening in the location. Don't forget, there's a location below here that's happening that making this guy to move, right? Right? And that even happened because there's an inducement again here. That this happened because there's an inducement here that ran into this PY. I'm not saying if you now want to enter your confirmation entry is IDM plus. So like we are doing here now. If you go to lower time frame, let's go to 15 minutes, 5 minutes. Let's see what candlestick pattern they form. So this is 1 hour. Let's see if 15 minutes will give us April. Let's see. 15 minutes will give us something. 15 minutes will give us something. Okay, good. Confirm. But I think the challenge is that you have to define your entry model before you come to the chart. So you're only putting in what you are seeing. Define your entry model before you come to the chart. What is my entry model? So look at after engagement, the candlestick that formed after engagement is your confirmation. And this is happening on a location at the left. This is happening on a location. That's the couple. This is happening on a location. Just like character thing on a location and candles on location. So this is happening here on a location. So after this broke here, this first bullish candlestick is your entry. If you are afraid of this one, wait for other ones to form. And this is happening 3 a.m. because we are in the Asian list, JPY. Euro JPY. This is 3 a.m. Again, 1 a.m. prime time. So if you have set a 1 a.m. candle here, 1 a.m. vertical line somewhere here, this is 1 a.m. So price did not do anything until it induced. Even 2 a.m. was still selling. But it happened that at 3 o'clock, the bullish candle closed. This can be a coincidence. that from here, the market now start buying. It's not a coincidence. So this is how I get my entry model. So I look at and backtest. So if this happens, that means there is a pattern that states that inducement plus candlestick pattern is an entry model. So what do? I put my entry at this guy and stop loss just below the low, and I'm good for the day. Boom. Second model, the base that formed becomes the other block that price will come back into and continue. And let's see what happens. Look at the base, right? Did it come back inside there? You can see it came back to the base. So you either use your candlestick after the inducement to buy, or you use the base, or you use both. Can you see how it came back after it put up? For the main move. So if you're entering from here, of course, you'll have taken profit from here if you're not greedy. If you're entering from here, you'll have taken profit from here, from here. All right? Take profits. And price came back again, that same block, then it moved, boom, massive. So this is not a coincidence, this is not random. So this has become my weighing pattern that I'm expecting every other time. This is one of the entry models that I don't be embracing. Is that clear? Firm. Now, okay, now we are now here now. We are now back to the price that has gotten here. Is entry model the size is just dropping. So in this case now, waiting for, let's take up this guy, IDM upon Abi. I wait for the candlestick that will form after this IDM. That will determine if this guy will buy or not. IDM has happened. This 15 minutes, right? The next IDM will be what? This low. That's the next IDM. This low is the next IDM. So I wait for a candlestick pattern to form. That's one. Then two, other block. The last IDM for this guy to invalidate is this last place. So if this 3 IDM is taken out, that means this trend has what? Cancelled. It's not valid again. Because you can't take out this 3 IDM, or let me takes out the 3 IDMs and still want to break inside. That might also happen. Okay? So this one has been what? Taken out. We are coming to this guy now. So what are we looking for? Candlestick that will close after the inducement. And most likely, 9 o'clock is what this guy is going to use, because timing, remember, that in loan section, timing is important. Timing. So since 8 o'clock is still selling, 9 o'clock might be the guy that will buy. I'm just saying. Do you understand the timing now? 8 o'clock still they sell. I want to only buy. That means 9 o'clock or 10 o'clock and be the guy that will buy. So we just keep observing. Remember, this is happening on where? A location already. On 4 hours, that is happening. Sorry, on a fair value gap rather. Breaker block is where this guy is happening. So it's a valid location. Don't forget. Our current price action is happening on where? On a breaker block. So we are in a location already. On high time frame. So mark 4. Do you understand? Our current price action is happening on the breaker block. So let's go back to 15 minutes. You can see. So this guy is still valid until it breaks it out. Is EJ clear? I think it's even coming to, look at it, look at where it's coming to. Okay. That one has been used already. That's the next order block. That's 15 minutes, yeah. So that's the last, that's the origin. So anything that happens here now determines what will happen 9 o'clock. Okay, 15 minutes order block. Yeah. Yeah. So we wait for candlestick pattern and what SMC. Okay, it's correlating with UJ. So let's check UJ. Let's check UJ. Back to the basics. 4 hours. But UJ, if UJ is selling, he should be buying. Well, let's check. Let's check. 4 hours. Similarly, you can see same. What do we have? We have a break of structure. For the break of structure, we have a fair value gap and we have the recent order block here. And we have also we have our order block. Forward block. Let's see if this guy is sitting on a location. Okay? Let's see if this guy is sitting on that's making this guy to now buy like this. What do? We can go to daily or weekly. Let's see if we are sitting on a location. That's the way to analyze. So we can see that we are sitting on what? On this guy that's induced. We are sitting on this demand that induced this guy. So on daily time frame, this guy is already bearish on daily. So you can take up this guy. This guy is already bearish on daily. What I'm seeing here now on USD is that USD might have a drop more. What I'm seeing here might have a more drop. Okay. 1, 2, 3. Break of structure, inducements, drop more to come to this base. Drop base rally. So drop base rally, demand. Then here we have daily inducement before the demand. So the USD JPY is pretty much bearish. Pretty bearish. Yeah, it's so clear because of course we are expecting a supply here. So you didn't get the actually, but I think on 4 hours there's a supply on 4 hours making like that to sell. That's the supply that's making like that to drop. Okay. It's a fair value gap. So all these big candles and this 4 hours fair value gap is what is making that guy to sell. This now there's a 4 hours fair value gap here and making this guy to drop. So this is what we have on 4 hours now. So 4 hours we have this setup. Okay. So price I want to go to the origin or choose to even induce the origin to come to this demand. So we have this setup for UJ. So UJ is still bearish, very much bearish, very much bearish. Until you see a change of character on UJ, you are still bearish. Until you see a change of character on UJ, they are still bearish. Is that clear? So 4 hours fair value gap. So, like we have said, our first point of interest will be this guy for a alignment. Okay, our first demand for alignment is there. Until you see your character, they are still there. They are still there. All right, I think that's clear. So I would rather wait for New York section. If I want to trade UJ, I'll wait for New York section to trade UJ. Okay. Yeah. So let's call it a day. I have to trade. I have to go and trade. All right. So let's just call it a day. Apply what we can apply. Do our best and leave the rest. Any question? So you can start by, for leaves, you can start by just simply marking out your zones. Mark out a break of structure, mark out your demand. Though you don't have to understand everything yet. Okay? You don't have to understand everything yet. Step by step, one step at a time. You are 1%, you are 1% close to mastery. I can assure you that you are 1%, you are always drawing closer to mastery. You are always 1% closer to mastery. Just keep doing. So I had a quote on my status that says, let me end with that. Your regular review and practice of your edge and disciplines will make you an extraordinary trader. Nothing can stop you now. Your regular review and practice of your trading edge and disciplines will enable you to be an extraordinary trader. Nothing can stop you now. So what you need to do is continue reviewing, continue to practice, continue to review, continue to practice your edge and your disciplines. When you get there, you will know. All right? Your regular review and practice of the edge makes you extraordinary. Just keep on practicing, keep on reviewing. One day and one day. Is that clear? Have I tried? Have I tried? So let's get to work. Yeah. So I said it here. I said the candlestick that forms after IDM is your first confirmation entry. When I posted on my status, one of do you know HFM, no, not HFM, 10 trade trainer, Mr. Martins. Who knows Mr. Martins from 10 trade? Mr. Martins from 10 trade, the education head. For him to like my status on that quote, it means say that statement is deep. I said the candlestick, that's the first entry model. The candlestick that forms after IDM is your first confirmation entry. Then the second one is now the other block like this. So let me put that out. I said it already. I was mentioning the entry confirmation model. So this is IDM entry model. Entry model 1. IDM with candlestick pattern, right? Then entry model 2 is what IDM with SMC order block. And I showed you what happened in that. Was it UJ that we did just now? Where after the IDM, it printed out the pattern, it went up, it came back to that same order block and it went again. So for this first one, it is the candlestick pattern that formed after IDM. The candlestick pattern that forms immediately, that was immediately afterwards IDM. The candlestick pattern that forms immediately after IDM. Why the IDM order block is the order block that forms at the origin of IDM. Just a note, just something like this, right? Candlestick that forms immediately after IDM, order block that forms at the origin of IDM. And this one, there have to be a retracement. So after the impulse, as it's coming back to that other block, we have this. So for Mr. Martins to like this comment, he should say, he did. So please don't joke what we are giving you. And some of these things, I'm just getting them while I'm teaching you guys. That's why I love teaching, because when I teach, I get fresh ideas from at the spots. It's not like I thought about it before. I get these ideas at the spots. I just get a fresh or a new perspective or a simpler way to explain what I've been explaining. So there will always be a fresh idea from where that's coming from. So confirmation entry. Oh. So go and backtest this. Anything I say, go and backtest it. Because some of this I'm saying coming in from a source that I myself need to go and backtest, because I just, and why am I sure it is going to work? Because when I say it, I come to the chat, I see it 1, 2, 3 times. So when I see something, I won't just say it as theory. I will come and show you guys that this is what I've seen, and it has worked year and year. So it's not a question of how many times more can it work. You guys just said, when I propound a theory, I'll come to the chat to come and confirm it, that it is practical. But it's only going to be practical about 1, 2 times. So you have to now go back and check how many times more, right? For confidence. So what I can say, this guy is working, but I've seen it happen already. I just showed you guys. Here. Okay. That was for, was it EJ? I think that was EJ now. Yeah, that was EJ. Look at it. What time frame was that? Was it EJ? 1 hour. Yeah, it was EJ. 1 hour. So I said IDM, the first candlestick. Now this is the IDM. It swept this low. Immediately after this IDM, and I see this IDM must be on the location, and this is the location established, right? Immediately after this IDM, what candlestick is forming? A bullish candlestick. On 15 minutes, you have gotten an entry, a early entry of the candlestick on 15 minutes. So it has to be a lower time frame. Okay, it has to be a lower time frame. So 15 minutes, look at it. After the IDM, immediately there was a candlestick close or bullish. That can be a coincidence. That we are having a bullish candlestick that is closing just immediately after these sell candles. So that is your first entry candle, your first. Your stop loss is just below the low. And also the session is also important. So we have double confluence. A confluence of IDM candlestick, and it's happening at an active session. Do you get now? So the confluence is your IDM with candlestick, your IDM with candlestick at active session, beyond active session, in strategic timing. We talk about this in our morning class the other time. Strategic timing. With these confluences, you cannot, there's no other reason you should not buy. Your IDM with candlestick at the active session, Asian, in the strategic timing, 2 a.m. prime time. So all these confluences together, it gives you double confidence. You can even put in Nakam or the Naka. So these are the things that, so London session, if you're in London too, mark out your 8 a.m. or 9 a.m. Put it there as your timing and your session. Now look for your IDMs that will induce to form candlesticks to confirm or other block. Is that fair? I need to end this now. Is that clear? I'm done. I'm done. All right. Okay, so that will be all for today. Thank you for joining. Any question? If no question, I'll end this call now. All right. Let's get a work. Let's get a work. Let's get a work. Thank you.